All right, let's talk about a corner of the market that is just absolutely fascinating. It's a sector that promises to, literally change the world, but it has left so many investors with some serious whiplash. I'm talking about small, innovative biotech. So are these stocks the next massive opportunity, or are they a trap, a gamble on a future that's just a little too far away? Let's dig in and find out.
Okay, to really get the story here, you just have to look at this chart. It's pretty brutal. We're using the popular ARK Innovation Fund as a stand-in for the whole sector. Now, look at this. Back in its 2021 peak, it was flying high, over $100 a share. Fast forward to today, it's sitting at around $33. I mean, that is a staggering 70% drop. Just gone.
So the big question, the one we're all thinking is, what on earth happened? How did these companies, stuffed with brilliant scientists and truly world-changing technology, fall off a cliff this dramatically? That is the mystery we are going to unpack today.
To really get the full picture, we have to understand that these companies have like a dual personality. On one side, you have this brilliant, blinding light of possibility. And on the other, you've got these really deep, dark financial shadows.
So let's start with the light, because wow, the promise here is nothing short of a revolution. Seriously, we're talking about CRISPR gene editing that could potentially cure diseases we thought were incurable. AI that can diagnose illnesses way faster and more accurately than any human. And things like liquid biopsies. Imagine screening for cancer with just a simple blood test. I mean, this is the stuff of science fiction becoming reality. And it's exactly why everyone got so incredibly excited. But here's the thing. It's not just about the cool science. The performance of these stocks, what makes them go up or down, is really driven by two incredibly powerful engines. Sometimes they work together, and sometimes they pull in completely opposite directions. You've got the company's own progress, and then you have the wider economy, specifically interest rates.
So let's peek under the hood at some of the companies in this space. You'll see these incredible names, right? CRISPR Therapeutics, pioneers in gene editing, Tempest AI. But then, look over at that financial state column. You see a pattern, don't you? Unprofitable, unprofitable, unprofitable. These companies are absolute leaders in technology, but the vast majority of them are not making any money yet.
And that leads us to a word you hear all the time with these stocks: cash burning. What does that mean? Well, it's exactly what it sounds like. These companies are spending a ton of money on research, on development, on building the future. They're burning through cash today, hoping, banking, on generating massive profits way down the road. And to do that, they need a constant stream of money from investors just to keep the lights on.
And this right here, this slide perfectly explains that second engine, interest rates. Just think of interest rates like gravity for stock prices. In a low-rate world, like we had back in 2021, money is cheap. Those profits 10 years in the future seem a lot closer and a lot more valuable. So investors are totally fine with taking big risks. But in a high-rate world like we have now, things flip. Suddenly, safe government bonds are paying you a decent return. So waiting a decade for a risky biotech company to maybe make a profit, that seems way less attractive. Those future profits get massively discounted. Gravity gets stronger.
Okay, so if rising interest rates were the problem, what does the path to recovery look like? Well, it pretty much all comes down to where rates go from here. Let's explore some of the possibilities.
Cathie Wood, who is, one of the biggest investors in this whole innovation space, has a very optimistic take on this. She sees the economy as a coiled spring. And what she means by that is once the conditions are right, the rebound won't just be a slow crawl back, it could be an incredibly sharp, powerful snapback.
And this chart really breaks down just how closely these stocks are tied to interest rates. At current levels, around 3% plus, we might just see a slow, gradual rise. Fine. But for a real, meaningful rebound, a medium one, we'd need to see rates drop a bit. For a strong rally back toward those old highs, well, the data suggests we'd need rates to fall all the way back into that 1% to 2% range. And to see brand new highs, we'd probably need rates below 1%. It's that direct.
Okay, let's zoom out. Enough about the short-term swings. As a long-term investment, how does this high-growth, super high-risk sector really stack up against, say, the old reliable S&P 500?
The numbers here tell a really interesting story. Over the past decade, the S&P 500 has given investors a really solid return, about 13% a year, with pretty low volatility. Meanwhile, the innovation biotech sector has returned only about 4% a year, but with more than double the volatility.
So, it has been a much, much crazier ride for a much lower return, at least so far.
But see, this gets to the absolute core of the argument for investing in innovation. The entire bet is that the future won't look like the past. And there's a wild card here, a potential scenario driven by a whole other technology that could completely change the game.
So just imagine this for a second. What if the AI revolution creates a massive productivity boom across the entire economy? This isn't a fantasy. It could create something economists call positive deflation, where stuff gets cheaper not because of a bad recession, but because tech makes everything so much more efficient. And if that happens, well, central banks could keep interest rates super low for a very, very long time.
In that kind of world, everything changes. We could see strong, sustained economic growth, and those super low interest rates would be like rocket fuel for growth stocks. The very same cash-burning companies that got absolutely crushed by rising rates could become the biggest winners in a world where money is cheap and breakthroughs are happening left and right.
So after going through the crash, the amazing technology, the economic forces, and this potential future, it all kind of boils down to one key question. A question for you, whether you're an investor or just someone fascinated by all this. At the end of the day, it really comes down to this. What percentage of your portfolio, or heck, even just your mental energy, are you willing to dedicate to the future? Because investing in innovative biotech isn't really a bet on a single company. It's a bet on a very specific vision of tomorrow, one filled with rapid technological progress and hopefully the right economic environment to let it flourish. How much you're willing to bet on that future? Well, that's the ultimate question.